Hey everyone, Kevin here. Today is April 17th, which means people cannot even be 30 days late yet on their April mortgage, because you're not 30 days late until May 1st. Well, guess what? 2.9 million people have already requested mortgage forbearance, and that's 2.9 million people who might be getting screwed by the mortgage forbearance program. And 2.9 million screwed people is gonna create a catastrophe for the mortgage market. In this video, I'm going to introduce some new information about how mortgage forbearance could actually affect your credit and how we might be getting screwed by mortgage servicers who, even though right now we're having the last laugh going, we don't have to make our payments for 3 months. Don't kid yourself. The mortgage servicers might be the ones with the last laugh when you're never able to get a loan again, or at least not for the next 5 to 7 years. After your credit gets destroyed. So if you're interested in the mortgage crisis, housing, you're a tenant, you wanna know what's gonna happen in the housing market, and you wanna know what the heck is going on here, let me walk you through it right now. In order to understand mortgages a little bit better, we gotta know this basic background. Your mortgage payment is usually due on the first of the month, which we'll call that April 1st. That's when it's usually due. But with mortgages, your payment usually isn't late until the 15th or 16th of the month. At this point, you get assessed a late fee if you pay after that date. Your bill will obviously say exactly what yours is, the 13th, 14th, 15th, 16th, whatever. It's something in the middle of the month. Then you actually do not get a hit to your credit score until May 1st. This is when you get something known as a 30-day late, because you actually have to be a full 30 days late, generally, don't sue me bro if I'm wrong, but this is usually how the industry works, in order to have your credit affected, which means you could literally pay your mortgage on April 30th and still be current. Yeah, you pay the late fee, but nobody knows about that. So you pay the $100 late fee or whatever, and your credit's never affected. This is really important because watch what's happening here with the mortgage forbearance and how they're setting over 2.9 million people up for a potential scam. Now, in order to understand the scam, you have to know this basic background, which I've been mentioning this basic background and this problem for like 3 weeks now. So I'm sorry if this sounds redundant. I promise there's new information coming out of this. But anyway, if you go to the bank and say, hey, you know what? I cannot make my payment for April. I cannot make my payment for May, and I cannot make my payment for June. You go to the bank thinking, you know what? You're protected by the CARES Act, because you know what? The CARES Act cares. And it says that your credit score may not be affected as long as you were current before you went into this forbearance agreement with the bank. And your credit cannot be affected as long as you have a written forbearance agreement with the bank. That sounds good. So you have an agreement not to make your payments for 90 days. Potentially you can extend this for another 90 days and your credit will not be affected. That sounds great. So why am I saying your credit might get hit? Now, this still isn't the big problem. This is just the lead up to it. We already know that if you don't make your payments in April, May, June, come July, you're going to have to make 4 payments in one lump sum. That's unfortunately how most banks are squeezing these 2.9 million people. They're saying, nope, we will not add these missed payments to the end of the loan. Call us in July if you can't make all 4 of your payments, and we'll help you out at that point, which is a really big empty promise that screws your ability to negotiate. Because guess what? Today, you have the ability to negotiate. Over here, you don't have the ability to negotiate. And I'll explain that. So whether July comes around and you're now 4 payments due, that is you have to make 4 payments in July, April, May, June, and July, or you took the 3-month extension and you're now 6 payments behind, plus that 7th month payment you have to make, you are going to be between 4 to 7 months behind. Okay, cool, we got that. Like, this is all basic. We've talked about all this before. We've said this was a problem, we said avoid this. Well, 2.9 million people took mortgage forbearance despite this, and they might be getting screwed into this scam. How many of y'all have heard of this word before? Loss mitigation. This is usually like the security dude at Best Buy staring at his computer and wheeling the little ball around, and he gives you that stern look as you're walking out of the store, checking your pockets to see if you got any bulging items, only to find, okay, I won't go that direction. But anyway, the loan world also has loss mitigation. And loss mitigation in the loan world means, okay, we got somebody who's not paying us, let's try to screw them into paying us. And guess what the first way banks try to screw you into paying them is? Well, they use something known as their leverage. And let's set this up very clearly. What is the biggest piece of leverage banks have over you when you owe them money? Your credit score. Most people, when we get a loan, we're really happy that we've worked up our credit score. We're like, sweet, I got a 700, I got a 740, I got premium pricing. You know what? I had a 640, I got a mortgage, but now I'm working to get my credit score up so I could get better financing in the future. I could refinance cheaper. I could take advantage of the low interest rates. You could do all of these awesome things if you have a good credit score. But the banks realize, all right, here's somebody who owes us money. If they don't pay us, we're gonna screw their credit. First things first. Because guess what happens? If banks say, we're gonna screw your credit, your likelihood of paying goes up if you care about your credit score. It's the same thing I teach in my property management course. If I rent to somebody with an 800 credit score versus somebody with a 500 credit score, and both of them stop paying me rent, and I say, dude, your 800 credit score is gonna get screwed if you don't pay me, and I say the same thing to the guy with the 500 credit score, the guy with the 500 credit score is gonna go, really? You're gonna screw my credit? It's already screwed. The dude with the 800's gone, oh, there goes 7 years of hard work getting my credit score up. See what I'm saying? That's leverage. Banks have the same thing. They have leverage over you. So your credit score is very sensitive. But you may be thinking, well, the CARES Act is protecting my credit score, right? No. The CARES Act protects your credit during the mortgage forbearance period. That is, lenders are not allowed to report you as late for April, May, and June. Okay, cool. Like, that's awesome. My credit's protected. Yeah, but what now happens in July when you have to make your lump sum of 4 payments in total, if that's what you agreed to? Well, you get transferred over to the loss mitigation department, and they're gonna help you do something called potentially a loan modification. But guess what the requirement is to get these people on the phone? Now, I'm gonna tell you what the typical requirements are to speak with the loss mitigation team, but just hold on to that thought for a moment. I want you to think of this and put yourself in the bank's shoes for a moment. The banks, the servicers collecting all of our mortgage payments are kind of getting screwed by the CARES Act. I mean, think about it. The government literally just said, hey, everybody, you can take 3 months off making your mortgage payments. And so you got all these mortgage servicers that are out of cash. They still have to pay their expenses and their bills, but they're not getting money. So in 3 months, these companies could potentially be on the brink of bankruptcy, unless, of course, they get bailed out. But especially in 6 months, if people take the 30-day option to extend, these companies are really potentially going to be on the brink of bankruptcy. So here you have companies that are like, we need to be able to squeeze every last penny out of these 2.9 million people, because we cannot afford to give all of these 2.9 million people loan modifications because we'll go bankrupt. So let's put the screws to these people. Let's get these people into a crappy situation, basically, where we'll say, fine, law says you get mortgage forbearance, fine, we'll obey the law, but just call us in 3 months and we'll take care of you. And then in 3 to 6 months, hey, here I am calling. You got no leverage. And now you got to go down the loss mitigation path at the same time as the bank is bleeding for cash, realizing there's no way they could afford to let 2.9 million people off the hook for making all of their payments, their catch-up payments, immediately. Because remember, the goal is to add these missed payments to the end of your loan. But there's no way the mortgage servicers can afford to do that. Again, unless Jerome Powell comes in and goes, no problem, folks. Oh, printed some more money to solve that problem. I mean, look, fine, that would be awesome, but that's not happening, at least right now. So we got to plan for the worst case. And just so you know, I'm telling you what the requirements are to speak with loss mitigation at most banks, because you still have time to make your payment. If you got your stimulus check and you accepted this 30-day forbearance or the 60 or the 90-day forbearance plan, you have another 13 days until the end of April. And if you can get your money together, quite frankly, I'd make your payment. You like, try to get out of this box. Like, do whatever you gotta do. Look, if it's not an option for you, keep watching. But if it's an option for you, be careful going forward with mortgage forbearance. Here's the loss mitigation problem. Anybody who went through 2007, 8, and 9 knows that in order to talk to loss mitigation to get a loan modification, it's not a simple waving of the wand. The banks are going to put you through the ringer again. It's not as simple as saying the law says you give me 90 days off, I get my 90 days off, where's my 90 days off? No. Loss mitigation says, all right, you wanna request that we let you add this money owed to the end of the loan? Show us all your financials. Give us your income, your pay. Let's talk to your employer. Let's see how much money you have in the bank accounts. Let's see how much money you got in the stock market. What can you liquidate to pay us? Because you have to prove you have a financial hardship for us to give you any kind of loan modification. Ah, crap. Nobody told us they were gonna audit the crap out of us. Maybe they won't, but it's possible. They have that right. They have the right to prove you are actually suffering a financial hardship. And somebody suffering a true financial hardship will go down this path because they actually are suffering a financial hardship and they really need help. But guess what other requirement they put against you, a sort of wall they put up to really see, are you just trying to get 3 months off or do you really have a financial hardship? Well, the second one, this is usually the big one. Again, some swift act of Congress or the Federal Reserve could change this, but usually banks require, before you could even talk to loss mitigation, which is why it's so hard to get through these people in the first place, they usually require that you are 30 days late. That is, in order to talk to loss mitigation, not only do you have to prove a financial hardship and all your records all of a sudden have to go out and where do you have all your assets, but you also have to be 30 days late. Which guess what happens? If you have, let's say, a 750 FICO score, credit score, and you haven't been late in years, or you've never been late, and all of a sudden they say, well, in order to talk to us about doing a loan modification, you have to be 30 days late, and then you miss your July payment, or the one 6 months from now, or whatever, you miss your payment, and you're actually 30 days late to talk to loss mitigation, that credit score, according to LendingTree, could fall as much as 100 points. That is, you could literally go from excellent credit, premium pricing, best case scenario pricing ever of having more than a 740 to having a 650 credit score, which according to Chase now means you can't even get a loan anymore. So when mortgage interest rates fall, like Freddie Mac says they're going to continue to fall over the next year, you're not even going to be able to refinance for those premium rates because you just got screwed. So how do we know what the impact of this is to the real estate market, to lending, and to tenants, and to everything that's going on in the world? What does this mean to us? Well, first it means you have to go down to the links below, deposit $100 with Webull, and get your 2 free stocks if you use that link below, up to $1,400 of free stocks. Get your quote for life insurance in 5 minutes or less, and of course use the coupon code to join my amazing real estate programs. Which, by the way, in those real estate programs, you get to meet me live every morning. The market is open at 9 a.m. and I will help walk through your deals, talk to you about your stocks, and any kind of questions you have about real estate or finances. Well, let's now assume that over the course of the next 3 months, a total of 7 million households end up requesting forbearance. And generally, people tend to move or sell their house or refinance every 7 years. That means next year, we might see 1/7 of 7 million people with mortgage forbearance not in the market anymore. That is, we might see 1 million less people involved in real estate refinances and or potentially buying and selling. Well, what is that relative to how many transactions happen in the United States? Well, in 2018, just shy of 6 million properties sold. And if 1 million people are now significantly less qualified or can't buy, well, this now represents 16% less people involved in potentially buying, selling, and refinancing, which not only means 16% less money for lenders, but also potentially means lower home values and potentially means we have less competition buying homes, which means less appreciation, and we have less qualified buyers for sellers. this is a problem. Now, obviously, this is just quick thrown together math and is not a necessary indication that home prices are going to fall 16%. But this is just a potential impact of 16% of people who can no longer be involved in the real estate game, at least until they fix their credit again, solely because of mortgage forbearance. I didn't mention all of the other people who might not be able to be involved in real estate anymore, at least for the time being, at these prime interest rates we're getting now because of this stuff. I'm simply saying because of mortgage forbearance, we could see 1 million people every single year that are not able to be involved in real estate buying or refinancing because of the stupid mortgage forbearance program. So this really leaves two options. One, the government swoops in or the Federal Reserve swoops in and solves this, or number two, you don't take mortgage forbearance. And if you're a tenant and you watched all of this and you're like, does this mean the real estate market's going to crash? It certainly means there's going to be a whole lot less competition over probably the next year. At the very least, there's going to be way less competition over the next 3 to 6 months, because guess what you also can't do when you're under mortgage forbearance? Forget about the credit impact. If you're under mortgage forbearance, you ain't buying a place. So if a good deal hits the market next door to somebody who's doing mortgage forbearance, the neighbor can't buy. Sorry, man, you took mortgage forbearance, you're not getting a loan. You're not getting refinancing, you ain't getting nothing. And your credit might get screwed, which might keep you out of the game long term. In other words, now might be the best time to become an expert in your market, to learn how to identify and buy real estate under market value. Join me in the live streams where I analyze deals every single day the market is open. And folks, get ready to go make some money.